just touching upon cycle and where I think we are, or the difference maybe this time from last times around.
We set the 69k all-time high was actually set in the bear market based on on-chain metrics. How do you feel the next cycle is going to play out?
It'd be difficult to see Fed funds rate get to 2%. I think it's more likely to get to 4, 5.
So today I'm joined with Adam Bryce, CEO and CIO of Athena Assets, a digital asset hedge fund. So Adam, it's good to have you here finally.
Yeah, no, pleasure to be here. Thanks for having me.
Awesome. So look, you head up a digital asset desk at a previous hedge fund, right?
Yes. So, well, same fund, we rebranded, yeah.
Okay, cool. And where did the idea initially come from to actually, at such a young age, go into the sort of your own fund?
So inevitably, well, crypto gives you, or gave me, the opportunity to gain the experience at a young age, which you'd normally need in traditional finance, maybe 20, 25 years in fund management before you ran a fund, whether it be for a bank or its own legal entity. I worked previously on a commodity desk, at a brokerage, then transitioned onto the digital asset desk, which is mostly essentially just taking orders from, on and pricing on the exchanges and things like that. Probably during 2018, 2019 bear market drawdown, it was quite evident that, even from today's standards, you could consider crypto even back then being like the Wild West, let alone 2013. Yeah, for me, it was. I've always wanted to run my own fund. In a previous life, maybe I was playing, sort of football in front of, thousands of people at a time, and I had to do something that excited me as much as that did. And I got to the stage when COVID happened. When you're working from home, you sort of, down sticks and think, well, is this what I want? Is there more? And like I said, crypto being a young asset itself, I still had sort of 3, 4, 5 years experience of managing client money in that sector, which is quite rare at that time. So yeah, sort of found a investment manager, which has a turnkey platform for crypto funds. And like I said, sort of went from there really, and sort of got in contact and then built the infrastructure with them and got launched.
I imagine a long-winded process.
Made more difficult with COVID.
Yeah.
Yeah, so off the top of my head, I think we started speaking maybe towards the end of 2019, early 2020, and we didn't launch till May 21. Right. So again, it was a good sort of 12 to 18 months.
I suppose considering we had COVID, it's not too bad actually. So
no, exactly. But again, I think the major thing was the FOMO for the market. I mean, the period of the market was in 2020, early 2021. It was it was probably the last remnants of easy money.
Yeah.
Which we're now not going to get.
Cool. Now you mentioned that previously professional football player. Apart from what sort of the winning and competitive sort of edge that you brought from being a football player, is there any other sort of transferable assets that you brought over to being in what you're currently doing now?
Yeah, I think there's the main one is teamwork and being able to work in a team. I'm really lucky where the team I have is second to none, obviously, with James, Amish and Dylan from TCC and Macro IQ, I think you had the other day. Being able to work with 3 people on a regular basis, on a daily basis, in something we all love, is a massive thing. But I would say teamwork's probably the most important thing that I took from football into fund management, really, which is probably something that I don't think many people can say. But yeah, I say teamwork is probably one of them. Like you mentioned, it's about drive and things like that. A lot of players are obviously highly competitive people in everyday life, and I don't think I'm any exception to that rule. So
okay, and look, hedge funds as a whole, hedge fund managers always end up getting a bad name. But and look, a lot of the hedge funds out there do underperform just traditional, the S&P 500, and the normal indexes. So, but I've currently in the crypto market, of course, Bitcoin and ETH down, pretty bad correction right now. Your fund has obviously outperformed the current market by quite a lot. What do you feel you've done different in regards to sort of risk management?
So just want a disclaimer. So this is when we rebranded to Athena. So after the departure of my business partner and fund manager, I sort of took on a different stance in the market. Okay. So if we're going from sort of February onwards, I don't know how much I can say, but again, the fund is down approximately about 8.3, 8.4% since February's NAV. To touch upon risk management, I've been personally through, watching crypto since 2015, 2016, been involved since 2017, 2018. One thing people don't quite realize is, you can be drawn down like we are now at, off the top of my head, 65% from the highs in BTC, 75% from Ether. There's no reason why it can't go to another 50%. What people need to understand, and maybe it could really help for the people who are listening that are, more along your retail type of investor, you need to understand that this is a marathon, not a sprint. And I'm not just talking about crypto. I'm talking about, mainstream equities and things like that, because, from my perspective, and I'm glad you brought it up with regards to risk management, that's the most important thing people need to essentially have under control for the next 12 to 18 months. Because it's going to go, I believe it's going to be quite a difficult period for the markets in general, and crypto's no exception.
Yeah, so you mentioned then we could potentially go down another 50%, right? Now, I remember, I think it was about 3-4 weeks ago, I posted on my Insta, do you believe, not yourself, but in general, who believes the typical cycle still intact? Now, when I say cycle, I don't mean the pre-program schedule, every 210,000 blocks, reward gets cut in half. I mean just the typical Bitcoin cycle that people's been following. The one I mean is stock to flow and all the other stuff. I think you said that you still think it was intact, right? Stock to flow and... No, not stock to flow. I mean, I posted that, I don't know whether you clicked the wrong one.
You mean cycle period?
So I don't know whether you thought I meant the halving or...
Sorry, yeah.
Yeah.
Obviously, the halving is intact.
Yeah.
With regards to the cycle, it ebbs and flows, people's opinions. Mine's fairly intact from what I've always thought, is that there is this programmatic halving. How the current environment receives that is something that is now going to change, in my opinion. Bitcoin itself and even crypto assets, they've never really seen a period of market conditions like we're going to see. It's only ever really seen positive monetary policy or outlook, low inflation, low interest rates, and a shed load of QE, which is fantastic for risk assets.
Yeah.
What we're going to see now is the complete opposite.
Yeah.
We're going to see higher interest rates, pulling money out of the system, and that's not good for risk assets. And crypto is certainly, as we've seen since the highs in November, is certainly not immune to that.
Yeah.
So I don't see any reason why, I don't see a real reason why it would now follow the same cycle that we've seen.
Yeah.
Because, like you said, every 4 years there's a halving. Traditionally 9 months beforehand we bottom, and then we see a huge sort of rally into post the halving. That could change, and I think there's a very strong argument to say that will change.
Yeah, I think, like you said, the macro conditions of the global economy the way it is now, and all the macro uncertainty is going to be very hard for anyone to really follow the traditional sort of Bitcoin cycle. And I'm not saying about the halving, because that's pre-programmed, unless the electricity gets cut off in the world, which everything is doomsday then.
Yeah.
But the reason why I mention it really is because I still see some people, I see that Plan B still holding on to stock to flow. Now, realistically, I think you should rename it to stock to floor. But it was good while it lasted, and a lot of these models are good while they last, and they're good until they don't work anymore. But just look at a few of the things that I was looking at with the sort of cycle that I still see people holding on. They're still looking at historical data. This looks like this looks like this in previous cycles. Now, if we were to look at historical data, you can't look at some and not others. In my opinion, you can't say, well, this pattern's playing out, but then this doesn't, but we're only going to follow this. I feel that you would know better than most people, being in a hedge fund, the sort of behavioral aspect of investing and the biases that people look for to suit their narrative, right? And I feel that crypto, like most asset classes, there's a lot of like cognitive dissonance involved when it comes to investing, and of course, dissonance involved get to do what you want it to do, right? But unfortunately, that doesn't happen, right? Yeah. And, for instance, this cycle, we've breached the previous cycle high, never happened before. But now the people that are now saying cycle still intact, that's never happened before. So what's different about that? And then the same people I'm seeing calling for 10 to 13K or 3 to 6K, which no one's writing off. Nobody knows right now, right? Were the same people calling for 1 or 200K 6 months ago. So, I feel people just, I don't know whether it's for social media, but, we've had the RSI most oversold in history. We're sitting under the 200-week moving average. That's pretty much signaled the bottom of every other bear market, but we're sitting underneath it now, and people are still calling for further to go. The cycle overall has underperformed massively. And one of the things that Mike and I went to the Bitcoin conference this year, and we went onto the on-chain stage, and one of the on-chain experts brought up that we set the 69K all-time high was actually set in a bear market based on on-chain metrics. Now, that made me think, okay, well, that's never happened before either. So this whole cycle still intact narrative to me was completely out the window anyway. But we're looking at the days. I see people count the days from previous cycles to bull markets to bear markets. Now, if 64K was the cycle top, the actual cycle top, then we're already past, I think it was 420 days last time. I think we're 440 now. Then we should already be looking for positive price action, which definitely doesn't look that way. CPI figures today.
9.1.
Sorry?
It was 9.1.
Oh, it's I've been stuck in here all day.
Yeah, an hour ago.
I don't want to look at the market today. and then, if 69K was the cycle top, then I think it's 200 something days. So in your opinion, from the risk management side of stuff, what are you expecting on the data that you're looking at, and what's your opinion on those cycles now?
Yeah, and just to touch upon what you said before about people saying the cycle's still intact, that's like you said, that's a psychological problem for them. Because people will write their own narrative to cope. Because we've all, especially when you're early in crypto, we've all been there, where it's your first purchases, are Ether 2017 at 1,000, you see it pull down to $70, $80. It's like, you have to be, you have to condition yourself, number one, to be as unemotional as possible when managing money, and managing your own money specifically, because money's a particularly emotional asset, because you haven't got enough of it, it's a stress, and you've got too much of it, apparently it's a stress. But just touching upon cycle and where I think we are, or the difference maybe this time from last times around, is like I said earlier. I mean, Bitcoin specifically, or crypto assets, have never seen a monetary cycle like we're seeing now. And for people just, if it was as easy as to say, okay, 420 days, we should start seeing positive reactions in the market, we should start seeing bottom out processes. If it was that easy, every single person in the world would buy Bitcoin 400 or how many X amount of days after the halving, or during up to the halving, and they'd sell at the exact top. But markets run, it's quite, when traders first get involved, they're taught, I assume, to watch the technicals, and the fundamentals mean nothing. It's quite funny when you think about it, but at the same time, fundamentals are what drives markets. Because one thing I'm probably most worried about as a fund manager, and it's something really the market can't price in until it happens, and we've probably seen a dress rehearsal with it in Russia and Ukraine, is China invading Taiwan. And that would be more catastrophic for the market and quite detrimental to breaking this cycle narrative completely. But yeah, I mean, I look at it from I try and look at it from a balanced point of view. Like, don't get me wrong, yes, I understand that, history doesn't always repeat itself, but it rhymes. I understand that. Do I think Bitcoin will be a lot higher in the future? Absolutely. Yeah. But it's going to see a lot of headwinds, and it's going to have to overcome a lot of problems for it to become what you would perceive, I assume, as either a store of value, a means of paying for goods and services. And as of now, it is what it is. It is, although it has been highly correlated to a tech index or a tech stock in the past, as the price will come lower, that correlation will drop off. And the cycle that you're talking about could not necessarily be defaulted, but people will have to change their bias one way or the other. Yeah. And unfortunately in crypto, people change their bias way too late. And it's not necessarily a case of forced selling, because I think when you get to a certain point in a drawdown, there's almost no point selling.
Yeah.
Because you make so little or you don't make any money at all. But yeah, I think it's going to be a pretty difficult, period, should we say, especially for those investors that are by the book, cycle driven.
Yeah, and I think that, look, as boring as it sounds, risk appetite and time horizon are probably two of the most important things as an investor approaching markets, because the problem is people dive in a bull market and they see everything going up every day. So they think that their risk appetite's huge until there's a drawdown, then they realize what their real risk appetite is. And then time horizon's the same. People in 2021, especially Q1, was like, look, I'm going to get in, I'm going to make a load of money, I'm going to get out. And they don't get out because they're obsessed with looking at unrealized gains on their portfolio. And then the market dictates their time horizon, because and I think it's a battle with yourself. And I think that's where the behavioral aspect of it is massive, and understanding yourself and before the market tells you how you feel. And unfortunately, I feel that you don't really understand your true risk appetite until that happens, unfortunately. Now, looking at the DeFi stuff, right? Now, we've had a crazy DeFi summer 2020, and then from then it's just grown and grown and grown, right? And I feel that it's grown so quick that we've just created one big Ponzi scheme, right? And so I see a lot of, look, and as you know, I'm a massive crypto bull, but looking at DeFi, I'm like, I see a lot of crypto maxis that we met a few at the conference this year and last year, and they're like, look, we need to escape traditional finance, move to decentralized finance. This is the way out of the system. And now what you're looking at when you see like Luna, not just Luna, I'm talking about the entire DeFi space now. You're like, you're escaping into something that partly is worse. Some of this is terrible. And I'm like, so how exposed some of these projects have become now. What's your thoughts on DeFi? Because I understand it's going to be a big part of the system going forward, but a lot of stuff needs to happen. What's your opinion from someone who owns a hedge fund, massive on risk management, your exposure to decentralized finance? What's your opinion?
I mean, don't get me wrong, there are certain DeFi funds already out there. We're not one of them. It's crypto assets themselves are an emerging asset class with extreme volatility, with extreme risks. But like I said, if your time horizon is right, and you're investing, appropriately, I think you can do pretty well in the next few years. The DeFi sector itself has almost, unfortunately, gained this cult following, and it's like you said, it's obviously you've been at the Bitcoin conferences and things like that in Miami. Some of the stuff that goes on there is wild, and not in a good way. If you're ever looking for a cycle top, just potentially head to Miami and just see the attitudes of people there. I think. Obviously, it's a sector within the crypto asset sector itself, which has huge potential. But again, it's going to go through its growing problems, like every project will, like every asset class does. So my thoughts on it, again, it's from my perspective, is again, it's definitely something we keep our eye on every day. In the future, again, if we were to be involved in DeFi, I can't say that I would be particularly comfortable with adding it to, say, the portfolio we have now, for example. Obviously, not saying buy it and not to buy it, but I'm just saying from a risk management appetite as of now, although the projects are solving real world problems, and like I said, it's definitely a sector that has almost unlimited growth with regards to the solutions it provides. It would have to be a separated fund structure, potentially specifically focused on DeFi. I mean, like I said, there are a few now that again have. If you look back to sort of Q1 2021 or 2022, some of the gains they're astronomical. But again, if you look at the performance since, it's complete inverse.
I think that I feel that DeFi scaled too quickly for itself. I feel that the developers and the protocols couldn't keep up, and I think that's why we're struggling. I say Solana, Ether, they're struggling. Like Ether's struggling to upgrade now to Beacon Chain. I feel that Solana's having all sorts of problems too, and like arguably two of the most well-known and best layer ones. But so I feel that of course it's going to be huge, but the amount of things that's being built on them, and like you said, also the sort of cult-like following to a lot of this. And so the way I also look at it is like these people are offering crazy staking rewards and yield And the way I look at it is like, look, the people are getting drawn in to yield, and then they're risking the token itself and the value or the price of they've paid for that token itself for yield. And that's all good when everything is going right. But then when potentially token collapses, liquidity dries up, platforms don't really take the tokens off. Like, there's all sorts of problems that come with it. So yeah, I know you can't directly give financial advice on here, but yourself personally, like, are you someone that will get attracted to yield, or you sort of look, I'm going to sit back, long-term investor, I understand where this is going, and I'm happy to extend my time horizon?
There's a saying, I wouldn't say it's famous. It's maybe an infamous saying, is if you don't know where the yield's coming from, look in the mirror. A perfect example was Luna, offering XYZ APY, supposed to be a stable coin, and if it's stable, it's essentially, to put it in really basic layman's, if you were going to stake US dollars and get 20% a year, how is that generated? Where's the risk being generated for that? Because there has to be an exchange somewhere in the system.
Someone's paying for it.
Someone's paying for it. And it's normally the people that are doing that. Because like I said, I mean, I'm trying to remember, like I said, probably was the end of 2020, early 2021, when some of these platforms were offering 5,000%.
Yeah,
and it's like, and people say, oh, this is amazing. Look at this. I'm staking 100K and I'm getting this much a day. It's like, okay, like, as long as you can lose 100K, crack on. For me, again, it's a balanced view. My fund, or my outlook, is betting on the sector itself. If you believe crypto will be here in 5 or 10 years, then you need to appropriately position yourself to not touch that investment capital for 5-10 years. And like I said, I believe that people can do very, very well. The problem I think it has longer term is how are you actually going to value it in dollar terms? Because again, with fiat having its own issues, like we're seeing in the euro at the moment.
Oh yeah.
Do you know what I mean? I think, but again, that plays into the part I said earlier about the market having a more sustained difficult period rather than like it has been for the last 10-12 years.
When you look at like ECB's not being in a great place for a long time anyway. But just before we move on to that type of stuff, NFTs. Now, I'm not like a big fan of NFTs. I'm more a fan of the utility that will come from NFTs. The actual underlying technology. But the NFTs, in regards to JPEG NFTs, they've never experienced a bear market before, right? So it will be interesting. I said this to Dylan the other day, how those communities really hold up in a bear market. And another thing, I'm sure you've looked at this. I doubt you hold like a Bored Ape in the fund, but but my point here is, we've seen platforms go down, right? We've seen platforms basically implement capital controls. We've seen that right now. If OpenSea, for instance, if OpenSea goes down, who holds that JPEG? Are they even on the blockchain? Because that's another thing that people are talking about. So what's your thoughts like on NFTs overall, first and foremost?
Again, and just to answer your question, no, we can't hold a Bored Ape for the fund. And we wouldn't. Because again, I probably bore my investors at the moment because I keep repeating the same line, but value or acceptance is the real value. Something like an NFT, and it's predominantly being used for artwork essentially at the moment, whether it be a Bored Ape or whatever, it's only really worth what someone else is willing to pay for it. NFTs maybe open up the Pandora's box of tokenization and things like that, which is probably quite an interesting sector itself. But again, my focus predominantly is mostly on portfolio management of crypto assets rather than really sort of getting down the wormhole that could be NFTs and DeFi and things like that. So I think if you're an art collector, or you're somebody that is essentially in it just for the capital appreciation immediately, and you're almost like you can almost trade them essentially, as people have, for hundreds of thousands of dollars, if not millions of dollars. Fine. But I think if you're buying something for capital preservation, you've got to remember that it's almost similar to gold, really, that it's only really worth what someone's willing to pay for it. Obviously, gold's had the thousands of years of track record, right? It's very different, but NFTs being a very new sector within the crypto asset sector, it's very difficult to say really what that's actually worth. And like you said, because it fell in line, maybe similarly with the bull market, what we've just seen, that obviously inflated the price quite nicely for a lot of people. So. Again, it's like my approach for NFTs is pretty much the same as DeFi, where it's, I know there are a number of people looking to launch NFT funds. How that really works from a regulation standpoint, I'm not sure, because again, it could be deemed quite illiquid.
Yeah.
Because, like I said, if OpenSea cut it or whatever type of NFT exchange they'd use, like I said, it's only really worth what someone could sell it on for, and if they can't sell it, they're caught with buying a Bored Ape or Penguin or whatever, and they can't sell it. So if you're an investor into that fund, and a lot of the time with regulated crypto funds, the minimums are higher of 100,000 or more. I don't think you'd be particularly pleased with putting 100 grand that you can't get out. And I think touching upon the OpenSea thing, it's very similar to what we potentially saw in Canada. I think it was maybe this year or the end of last year, with obviously the freezing of bank accounts and things like that. It's But that's obviously a very different scenario. But like I said, who holds the NFTs, who holds the tokens when those things go down? And it's an age-old saying now in crypto. But it's not your. It's just, if it's on the exchange, it's not your keys.
It's not your coins. And onto like sort of Celsius and Voyager, and like you said about Canada, the capital controls. And I'm not sure if this is right, but I think it was 2014. Either the G20 or G7 got together and said that the UK can now use capital controls, and we've seen it happen. Like Greece was one a lot of people seen it happening, and it can happen. And as soon as you deposit your money into a UK bank account, they become the legal owner. And when you look at like sort of Celsius, Voyager, and even just any of these platforms are like, look, we're going to freeze withdrawals, right? That's capital controls. They want to prevent a bank run. That's what they're trying. They don't want everyone to pull because the money's not there.
Yep.
And so I know Celsius have brought their liquidation price down to sub 4K or maybe less now. Maybe they're balanced now. But what is your thoughts on these sort of centralized exchanges, first and foremost? Because I got a question to follow up on this one.
Yeah, I mean, I wrote again to investors probably a month ago now. There's a number of projects that I was not particularly confident on. Celsius was one of them. I think it's just been, again, proven that, as we said a minute ago, if it's on the exchange, it's not yours. And it's the same with the bank. If you deposit, it's not your money. And it's I think the era of hard money is probably going to re-enter over the next 5-10 years. My thoughts on Celsius itself, I mean, there's been a lot of controversy around personnel anyway at Celsius of how they got into the positions they got into, because then essentially a lot of people, and do you know what, maybe a lot of people could say the same about me with regards to being in the position that they're in. I'm a 27-year-old fund manager, managing a crypto fund. Obviously my view is obviously very balanced, as I keep saying, but I think what happened was people tried to piggyback on the growth of crypto too fast, too early. And obviously when the market reverses, I mean, the market can stay liquid longer than people can stay solvent is the most important thing. Yeah. So it would be interesting to see really what the developments are with those centralized exchanges. But again, I think if they were, like I said, you said they brought the liquidation prices down and things like that. I think, 4K, 5K, 10K, it doesn't really make a difference, I think. Because again, I think value is acceptance, or acceptance is value. And, unfortunately, that will be a black mark against Celsius forever.
Yeah, once trust gone in this space, what trust is what everything's built on, fiat or crypto is trust.
I think that's what I dislike probably the most about the crypto sector itself is this knee-jerk reaction to F the system. And, we need to get away from this. Yeah, the system has its problems, but the system currently functions in a way where, we don't have to go wandering the streets looking for food and water. And that's the most important thing is about a functioning society. That's always going to change. I mean, if you look at the evolution of money itself, we can span it back to 2,000 plus years ago with the Egyptians and gold. in the UK, livestock and whatever going forward, and then paper money, credit cards, Apple Pay now for use of your phone, and crypto. It will be a continuous development of what is money. But with regards to the centralized exchanges, I mean, everything is built on trust, as you said, with the